Good morning, students. So we have to do a second part of cash flow statement. First of all, we understand what is the meaning of cash and cash equivalents. See, cash means liquid cash, which is needed to be paid anytime in need. It includes cash in hand, and cash also includes demand deposits with banks. That is your deposits, your balances with banks. And cash equivalents indicates cash equivalent are short-term, highly liquid investment that are readily convertible into known amount of cash and which are subject to an insignificant risk of change in value. So there are two things in cash equivalent which can readily be converted into cash, and second thing, their value will not change quickly. Their values are hardly going to change. So cash equivalent and cash. So we see that cash equivalent, to qualify anything into cash equivalent, it should have a short maturity period, that means readily available, 3 months or less from the date of acquisition, or it is subject to an insignificant risk of change in value and there is hardly any change in their value. You see, we should not take investment in shares over here because shares values are fluctuating. Every month it changes like that, but it is not so in this case. Examples of cash equivalents are cash in hand, cash at bank, marketable securities, demand deposits, commercial papers, money market funds, treasury bills, short-term investment and marketable securities, which are included in cash and cash equivalent, investment in preference shares redeemable within 3 months if there is insignificant risk of change in its value. There is no risk in changing the value. Remember one thing, student, current investment is not taken as cash equivalent because it's a part of working capital, current asset, and it will come under operating activity rather than cash and cash equivalent. So anything which can be readily converted into cash and which has hardly any change going to take place. They are cash and cash equivalents. Now comes what are operating activities? Operating activities are the principal revenue producing of the enterprise and other activities that are not investing or financing activities. They are the principal revenue, that is sale of goods, purchase of goods, direct payments. Therefore, cash flow statement under the following activities results from the business transactions and events that determine the net profit or loss. Therefore, they are those cash flow activities which indicates the direct income. Examples of cash flow from operating activities are cash received from sale of goods or rendering services, cash received from royalties, fees, commission, and other revenues, cash received from trade receivables, like from debtors, from bills receivable, cash payment to suppliers of goods and services, cash payment and on behalf of employee for salaries, wages, etc., and cash payment of and refunds of income tax unless these are identified with financing and investing activities. So these are all our operating activities items. Now we have financing activities. Financing activities are those activities which result in change in size and composition of owner's capital. That means financing activities means increasing or decreasing the capital of the business. Both capital, that is own capital and loan capital. Thus, increase in share capital, redemption of preference shares, increase in borrowing and repayment of loan, etc. are known as financing activities. They are issue of shares at par and premium or at discount. Issue of shares or discount we doesn't have. So issue of debentures at par, premium and discount. Redemption of preference shares. Redemption of bonds. Redemption of debentures. Interest paid on long-term and short-term borrowings. Dividend paid, interim dividend paid. Long-term borrowings and short-term borrowings. That means company has taken long-term borrowings like long-term loan, or short-term borrowing like short-term loan, bank overdraft, cash credit, whether taken or paid, repaid. Share issue expense, also known as underwriting expenses, underwriting commission. Buyback of equity shares means buying of shares only. Then payment of dividend both on equity and preference shares. So these are all coming under this one, financing activity. So these are all financing activities. So we have written dividend twice, it's no problem. Now the thing is, next one we will be doing is investing activities. Investing activities include the acquisition and disposal of long-term assets and other investments not included in cash equivalents, which are not held for resale. Examples are cash purchase of fixed assets, cash sale of fixed assets, purchase of shares or debentures or long-term investment of other companies, interest and dividend received on shares or debentures or long-term investment of other companies. See, over here, interest and dividend received, because you have invested, you are receiving. You are selling any asset, you are buying any asset, you are selling for investments, you are buying for investments. Loans and advances to third parties, receipts from repayments of loans and advances to third parties, sale of shares or debentures or long-term investment of other companies. They are all considered as investing, means companies investing in order to earn more. Remember, short-term investments and marketable securities are included in cash and cash equivalent and are not considered as investing activities. Now we have a sum. We need to classify these activities into cash and cash equivalents, investing activities, and financing activities. Let's see these transactions. Issue of shares at par and premium. What type of activity is this? It's a financing activity. Redemption of debentures at discount. Again, this is a financing activity. Interest paid on long-term borrowing. Interest paid, obviously, you are paying interest because you have taken loans. So it's a financing activity. Dividend paid, financing activity. Bank overdraft, cash credit. Bank overdraft is also financing activity, short-term. It is short-term loan, bank overdraft. Cash credit refund. You have taken some short-term loan, you are refunding. Again, it's an investing activity. Share issue expense. It is also financing activity. Buyback of equity share is also financing activity. Cash purchase of fixed assets. Buying an asset, selling an asset. Purchase of shares, debentures, or long-term investment of other companies. Interest and dividend received on shares or debentures or long-term investment of other companies. These are all investing activities. That is fixed assets, interest, then investments like on debentures and all. These are all investing activities. Cash payment of income tax. It's an operating activity, students. Operating activity, income tax paid. Then marketable securities. Marketable securities you have taken, that is a cash and cash equivalent. Money market funds, cash and cash equivalent. Treasury bills, cash and cash equivalent. Marketable securities, cash and cash equivalent. Investment in preference shares, redeemable within 3 months if there is insignificant risk of change in its value. This is also cash and cash equivalent. So these are all what we have done is classified the activities into several categories. So students, these are the solution. You can take the picture of this and do the sum. And you have a homework also. This is the homework. Please do the homework. And if you have any queries, you can ask through WhatsApp number, through email, or you can comment in my channel. I will be happy to help you all. Thank you, students. Thank you very much.